So today, thank you for joining. Hopefully we'll give you some little bits of information here and there about the research and development tax incentive. Just going to broadly cover some high-level topics, go through basically 3 different portions, and then we'll hopefully have a bit of time at the end for a couple of questions if you guys have got any. So we'll get stuck in. So just to kick things off, just give you guys a little bit of background about me. So as you're all probably aware, my name's Stephen Roberts. I'm a senior manager here at Vincent's, been with Vincent since 2009. I've got 13 years experience providing business and taxation advice to individuals, small to medium enterprises across a number of different industries. And I also specialise in the research and development tax incentive and other early stage and innovation type incentives that are for investors such as early stage innovation companies and the like. My contact details are just down there. So I'll give you guys a quick second just to write them down. In case we don't have time for questions at the end, by all means, feel free to contact me on that email address sroberts@vincents.com.au, or alternatively my phone number 32284068, which is my direct line. So if you don't get a chance to pop through those queries, by all means, write them down and flick them through. You can also find me on the Vincent's website if you don't have time to write them down, and by all means, send through some questions. I'll be happy to help you out. So as I said, a little bit about today. So we're just going to go through a rough introduction, just a very R&D 101, if you will, a very high level sort of approach on what it is, what does it offer. We'll then get stuck in a little bit more into that, what does it offer. So we'll go through, well, you know, what's the incentive and why would I want to be interested in the R&D tax incentive, or what's in it for me essentially. So we'll answer that question for you. And third and finally, if you are interested in it, which is, I'm guessing, why you guys are here to listen a little bit about it. How and what can I claim? So we'll go through that in terms of eligibility and expenses that we can and can't include. So I'll start off with the introduction. So the R&D tax incentive is a self-assessment program. Now, what that means is that, similar to your income tax return, you lodge your income tax return with the Australian Taxation Office every year. And you self-assess on how you submit that income tax return, i.e. you complete the tax return based on the information that you have, and the ATO acknowledges that to be true and accurate unless they pick it up for a review or an audit. The R&D tax incentive program is the exact same in the sense that you lodge an R&D application, you'll receive a registration number from the Department of Innovation and Science. That's not the Department of Innovation and Science acknowledging that you are or are not conducting R&D. It's merely an acknowledgement of you lodging the application appropriately and completing all the boxes accurately. It's a jointly managed program. So the Research and Development Tax Incentive is managed between the Department of Innovation and Science, previously known as AusIndustry, and the Australian Taxation Office. So the Department of Innovation and Science, they look after the eligibility side of things. So when you lodge your application, you don't actually lodge it to the Australian Taxation Office. You actually lodge it to the Department of Innovation and Science, or previously AusIndustry. It's an application with a couple of different pages on it. And as I said, Department of Innovation look after eligibility, so whether it's an eligible activity. The Australian Taxation Office is the other co-party to managing the R&D tax incentive. And the ATO look after the dollars side of things. So when you claim certain expenditure under your R&D, the ATO look after that side of things, because the ATO or your tax return is the mechanism by where you actually receive the incentive. We'll go through that in a little bit, just to make that a little bit more clearer, but it is a co-managed, which is why some people have asked me questions, oh, why am I lodging an application with Department of Innovation and Science and I get it through my tax return? It's because it's a co-managed program. So the R&D tax incentive, it's been around for 30, 40 years. It's been rewritten recently in the last sort of 5 to 6 years. It's essentially, it used to be heavily governed or aimed towards people in lab coats and test tubes and making something tangible or alike. Since they rewrote it, it's now on a broader scale in the sense that R&D can be eligible activities, including things like products, processes, and services. So they can be intangible now, and it's a little bit easier to get in with regards to the services and the processes point of view. So R&D isn't always tangible. It can be intangible. So, for example, IT, software can be an eligible project now. It could previously, but it needs to meet a certain condition. We're not going to go through the previous rules. We're just going to focus on the rules as they stand today. So the program itself, it's a tax incentive aimed at encouraging R&D. So it gives a incentive to small to medium enterprises and also large enterprises to encourage them to conduct R&D activities, and the ATO and Department of Innovation and Science will give an incentive back for doing that. So that's what the program's about, and we'll go through that in a little bit more detail. So the $30 million question is, what does it offer? Why would I want to do it, and what's in it for me? So it depends, as it always does. Your turnover dictates what type of incentive you'll receive. So if your turnover is aggregate turnover, so it's your turnover and other entities' turnovers, if they're related to you or affiliates or connected with, it's all grouped up together. It's aggregated, and if your turnover for your group is over $20 million, then the incentive is a 38.5% non-refundable tax offset. Now, a non-refundable tax offset is a tax offset which reduces your tax, but in the event that you don't have tax to offset, you don't get it back as a cash back, but you can carry it forward until you do have tax to offset it against. If your turnover for your group is under $20 million, then the incentive offers a 43.5% refundable tax offset. Now, again, the refundable tax offset it offsets any tax that you might be liable to pay. However, in the event that the refundable tax offset is in excess of your tax payable for that year, anything over and above that will be a cash incentive back to you. So you will actually get that as a cash or a check from the Australian Taxation Office, remembering that it's a co-managed program. You've got to spend a minimum of $20,000 in each financial year, or the financial year that you wish to claim the R&D tax incentive. That is excluded if the expenditure is to a research service provider or an RSP or a cooperative research centre, and they're specifically listed, things like CSIRO, universities and the like. How much you've got to spend? Over $20,000. If your spend is over $100 million on R&D, you can still get the R&D tax incentive. More than likely, your turnover is probably going to be over 20 million, so you'll only be entitled to the non-refundable tax offset. Any dollar over the 100 million is reduced to the company tax rate. So to put that instead of words, give you guys a graphical representation of what it actually means and a quick example. Hypothetically, let's say that your R&D entity has spent $500,000 on R&D or on eligible activities, on eligible expenditure, which we'll go through in a second. Let's also assume that your income is under $20 million, that you're in a tax loss position after doing your income tax return. Those three components, which is quite common for things like startups or new enterprises endeavoring on a new novel concept, that would result in a cash back from the Australian Taxation Office of $217,500. So as you can see, it is quite lucrative. So how and when can I claim? So this is now we've talked about what you get and what's the positives and why would I want to go down it. So we're going to dive in a little bit into the eligibility side of things and what we need to do. Essentially, eligibility is is split up into three broad categories. And they are the activities themselves. So what you're actually doing, does that fall under the R&D tax incentive? Now, I might note right now that something that may be understood to be research and development from a general or a broad perspective. The R&D tax incentive eligibility criteria is quite specific, and there's a lot of documentation around it on what is and is not eligible activities. So just because someone may think they're conducting R&D in the general or broad sense, that might be 100% true. However, to fit under the R&D tax incentive, it needs to meet these specific criteria, which we'll go through in the next slide. The second portion is, are you in a R&D entity or the right type of vehicle? And finally, the R&D expenditure, so what we can claim and what we can't claim. Assuming we get all those three things right, then we should get access to the R&D tax incentive program. So we'll start off going through activities in more detail and the eligibility around that. Then we'll go into the entities, and then we'll go into the expenditure. So the activities themselves, as part of an application, we need to articulate three broad categories before we get into what's on the screen now. The three broad categories are the overall objectives of the project, the new knowledge that we're generating, and why it couldn't have been determined or known in advance. Now that's the second two components of what I just said links into this core activity, as you can see, but the objectives of the project sort of gives the Department of Innovation and Science a broad overview of what your activity is trying to ascertain. Now, it's quite key to note here that eligibility to the R&D tax incentive is at the core level. It's not at the top three boxes of the application form, if anybody's familiar with them, and it's not at the objectives or even where you fill out the new knowledge being generated at the top. Eligibility is distinguished and assessed at the core activity level. So, what is a core activity? Core activities are experimental activities. Now, those two words, or the first word specifically, is experimental, so it's got to be experimental in nature. There's got to be a degree of uncertainty. There's got to be a degree of technical risk, a chance that it could fail. It's got to be experimental in nature. So we don't actually know what we're trying to, or what the outcome will be. All we know is we've got a thought process, we've got a question that we want answered, and we need to undertake a number of tests or a number of things that we need to do to then test if our question was right or wrong. So the activities that we need to be undertaking need to be experimental in nature, and that is a really key word. Now, those experimental activities can't be known or determined in advance based on current knowledge, information, or experience. So they wouldn't be experimental if we could have known them in advance. And the key question there is, does anybody else do this, or is it a novel process? Is there someone in Germany or Switzerland or France or England or Americas conducting the same thing? Or does somebody out there know the answer to the question that we've asked that we're trying to experiment on? Now, that does actually require you guys, or the taxpayer, should I say, to undertake a bit of research into that field, just to make sure that we are actually conducting something new and novel. Now, those activities need to be a systematic progression of work based on scientific principles. I might just note also that these are and tests. These are not or tests. So you need to meet, so each activity needs to meet each one of these independently, not I've just got to meet one or two. We need to meet all of these categories. So the systematic progression of work based on scientific principles essentially rules out trial and error. So we've got to have some sort of methodology to our experimental activities. So, for example, it's got to have a question, as I said before. I've got to do or program a sequence of tests. I've then got to receive, observe those tests. I've got to reach some sort of logical conclusions, and then come back to with an answer of, well, did I prove or disprove my question? And those questions are commonly referred to as hypotheses. So again, I have a hypothesis, here's my question, here's my test, this is how I'm going to carry it out, and this is what I learned after my test, which also links back to the experimental activities. Now, we've got to be doing all of that for the purpose of generating new knowledge. Now, new knowledge can be in the form of a product, process, or service, as I previously mentioned, so it doesn't have to be tangible, but we have to be generating new knowledge. And again, new knowledge is not governed to Australian borders. New knowledge is publicly available information worldwide. So just because Australia is not doing it, doesn't automatically include you in R&D tax incentive. Again, we need to undertake a little bit of work to make sure that the new knowledge that we are generating is on a worldwide basis, not just to Australia. That's the core activities. After that, we've then got the supporting activities. So supporting activities are any activities which supports the core, in the sense that it may be excluded as a core. It might be, it doesn't meet all of those criterias, but it is a required activity for us to perform a core. An example for a supporting activity would be, let's say, for example, I'm building a new clothesline. And the new clothesline is going to have laser beams as opposed to wire, because it'll dry the internal of the cloth or something like that. A supporting activity might be me researching the market to see if there is a clothesline out there with laser lines. Another supporting activity might be me sourcing the materials to then build my prototype. Another supporting activity might be actually building the prototype. The core activity is whether I can actually build it and whether it works as a clothesline. So you can see there that the core activity would be to test my prototype to see if my prototype actually works. But the actual building of the prototype is more than likely going to be a supporting activity to my core. So we need to split activities between the core and supporting. And more importantly, we need to document both independently, and we need to substantiate both independently. So that's the core and supporting. Again, I'll reiterate that the R&D tax incentive is based on eligibility at the core level, not at the supporting level. If we have any activities that are conducted overseas, I see this quite commonly in IT or the ICT space, where people use developers from overseas in lower socioeconomic countries that have a lower cost of wages. Overseas expenditure or overseas activities can be included in an R&D tax incentive claim. However, we've got to tick one of two boxes. The first box is the activity or the expenditure incidental to the overall activity? Now, an example of an incidental overseas expense is in my clothesline example. I send one of my staff members to Germany to go and see, to go to a conference, a 3-day conference to attend a clothesline information conference that they have over in Germany, for example. That would be incidental because I'd probably only spend a couple of $1,000s. It's a 3-day thing just for my staff member to get skilled up in the German way of doing things, to then bring that knowledge back to Australia, for me to then continue my Australian R&D tax incentives. Now that would probably, or more than likely, be incidental to the overall R&D activity that I'm conducting. If it's not incidental, so an example is I was conducting my tests over in Germany. I was engaging a German manufacturer. I was engaging a German lead engineer. And basically the majority of my activities were actually done in Germany. That obviously would not be incidental, and it would be quite the majority of my R&D activity. If that were the case, I would still be able to include it in an R&D tax incentive if I lodge what's called an overseas and an advanced finding. Now, what that means is we can ask the Department of Innovation and Science if we can include this activity in our Australian R&D tax incentive claim. Now, to do that, there needs to be a number of criteria on why we had to go overseas to do that activity. A number of examples are if it requires an expert or facilities or equipment that's not in Australia. So let's say that there was no manufacturers of clotheslines in Australia, and I had to go to Germany to do it because there's no one in Australia that would be able to do it for me. If I was contravening a law, so let's say that Australia banned me from building clotheslines in Australia, that might be okay as well. Or if there's population or geographical restrictions. So for example, I can't think of one to do with the clothesline, but if there is a population or geographical restriction on why you can't do it in Australia, again, that may be grounds that we can go and ask Department of Innovation and Science for an overseas and advanced finding to include that activity in your Australian R&D tax incentives. Now, I have had one with regards to the first one, requires experts, facilities, or equipment that isn't located in Australia. And as an example, that was for the encapsulation of solar panels. So they were making solar panels that needed to be bent or curved. And I understand there's only 2 manufacturers in the world that can do that. So on that basis, we included it and we produced an overseas and advanced finding. And the final one there is in the advanced finding, which is where, regardless of whether we're conducting overseas activities or Australian activities, we can actually ask the Department of Innovation and Science, because remember, co-managed Department of Innovation and Science look after the eligibility side of things. We can ask the Department of Innovation and Science if we are or are not conducting R&D. Very similar to the R&D application that we lodged with them. It's just a different form, and we're basically asking them to do a judgment or give us a definitive answer on what they think in terms of whether we are or are not. It's very similar to if you have any history or knowledge on a private ruling application through the Australian Taxation Office. It's very similar from the Department of Innovation and Science. It's essentially seeking a ruling from them. So if we're not sure, or if we're a little bit borderline, or we're not quite sure if it's going to meet the definition, we have the opportunity to ask them and they will give us an answer. So that's the activity side of things. The second one is the R&D entity. So the R&D project or activities need to be conducted in an eligible R&D entity. Now, the first one that gets through the door is an Australian company. So an Australian company registered in any state or territory in Australia, as long as it's a Pty Ltd, that is an eligible entity. If you have a foreign company, it needs to be a tax resident for Australian purposes. So it needs to be an Australian tax resident. If it is, then again, an eligible entity. If it's a foreign company that's not an Australian resident, the company that it is a resident of or it was established in needs to have a DTA or a double taxation agreement with Australia. And that foreign company needs to be conducting a business through a permanent establishment in Australia. That permanent establishment will then be entitled to claim the R&D tax incentive. What's ineligible is essentially any entity that doesn't fit within those 3 categories. So they include an individual. So if an individual is conducting R&D, those projects conducted by that individual would not be entitled to the R&D tax incentive. Similar to corporate limited partnerships and trusts. Now, trusts include fixed trusts, discretionary trusts, hybrid trusts. Ownership of the R&D entity may affect the R&D tax incentive by the fact that it might be limited. So an example there is if the ownership is tax-exempt entities or tax-exempt bodies, then it may limit the R&D tax incentive. So just a question that we go through when we do the R&D tax incentive. So that's the entity, quite easy. The easiest one there is the Australian tax company. If we're a Pty Ltd, generally we're going to get straight through the door. So the R&D expenditure. So we'll just talk briefly now on the expenses that we can include. So we've talked about the activities and we've talked about the entities. So the final piece of the puzzle is what expenses we can incur. And remember, the target we're trying to hit is a minimum of $20,000, unless it's to a cooperative research centre or a research service provider. So the expenses that we can include, essentially it's a very broad range of expenses that we can include. The examples that we have or quite common that I see are salary and wages of both the technical staff, the people that look after those staff, the engineers, etc., etc. Contractor expenditure, so if you've needed to engage a third party to assist with yours because you don't have the internal expertise or knowledge, maybe it be to the manufacturer of a prototype, maybe it be to an engineer to contract to you. Contract expenditure that relates to your R&D activities can be included. And a percentage of your overhead, so running costs associated with your entity can be attributed to the R&D activity itself. So an example of that would be in my manufacturing of the clothesline example. If I rented a building, I would be able or entitled to claim a percentage of that rent that was particularly for my R&D tax incentive activity of that clothesline. So percentage of rent, electricity, telephone, etc., and we can do a apportionment of the overall expenses that related to the R&D tax incentives. Decline in value. So if we have purchased plant and equipment or assets to engage in our R&D activity, the depreciation on that plant and equipment can be included in your R&D tax incentive claim. An example of that would be if I bought a laptop to do my designs, if I bought plant to test my clothesline, if I bought plant to manufacture my clothesline, the depreciation on that plant I'd be entitled to include in my R&D tax incentive. Similarly, if I sold or disposed of an asset that I had included in my R&D tax incentive, the profit or loss or the deductible or assessable balancing adjustment of the disposal of that asset can also be included in an R&D tax incentive. An example would be if I bought a piece of plant which I sold at a loss of, say, $5,000, I could then include that $5,000 into my R&D tax incentive, assuming that the plant was 100% for R&D, then I would include the $5,000. So expenditure that's excluded is interest, so interest expense. So if we've taken out a loan to purchase something, or if we've taken out a loan to pay for expenses, the interest on that is not entitled to be included. Expenditure on assets and buildings, on buildings is excluded. So depreciating assets of that building, so capital works, is excluded. So for example, if I built a complete building to house my manufacturing plant, the depreciation on that building asset would be excluded. Expenditure not at risk. So that is talking about if I'm guaranteed to be reimbursed. I've seen that commonly if there's related parties involved and we set up a special purpose R&D vehicle. There's a contract between the R&D special purpose vehicle and the trading entity, whereby the special purpose R&D entity is guaranteed to be reimbursed all of its expenses. So the expenses that the special purpose vehicle has been expensing and conducting is guaranteed to be reimbursed by the trading entity, then that expense isn't really at risk because it knows it's going to get 100% of its cash back from its related party. So that expenditure will be excluded. Core R&D technology. So in my clothesline example, let's say somebody had built 50% of it and I purchased that 50%. My initial purchase of that 50%, my outlay or my expense for that would be core technology, and it would be specifically excluded as well. The reason for that is because more than likely, the person that I had purchased that off has probably already claimed R&D tax incentive on that initial purchase. So for those reasons, they exclude that core technology expenditure. Now, if we incur expenses, and that's all for excluded expenditure, anything else can generally be attributed to an R&D tax incentive activity can generally be included. There's a little carve out, or not carve out, but special laws or rules around related party transactions, and we'll just go through them really briefly now. So if you incur expenditure from a related party, you can include that. However, first we need to ascertain if the party that you've incurred it from is a related party, and that looks at the small business CGT concession rules with regards to affiliates and connected with associates. Assuming that you have incurred expenses from that related party, it needs to be paid, and I'll get to the definition of paid in a second, in the financial year that you want to claim it. Now, in the event that you don't pay that related party expenditure in that financial year, you can still include it in your R&D tax incentive application that you lodge with the Department of Innovation and Science, but you can't claim it until you physically pay it. So in that example, let's say I've incurred $10,000 from a related party in the 2016-17 financial year, but I don't actually pay it until the 2017-18 financial year. Now, in that event, I would include it as part of my application that I lodged in 2016-17, but I wouldn't actually include it in my tax return until I physically paid it in the 2017-18 financial year. So the key point there is you can include related party transactions, but you can't actually claim the tax incentive through your tax return until you physically pay that amount. Now, payment has a definition of essentially twofold, threefold. One, you physically pay the cash, so a cash transaction moves from one company or the R&D company or entity to the related party. The second one is if there's an existing loan between the two, then the reduction of that loan by way of the invoices or the services being rendered can also be classed as payment. So an example there's if I have an existing loan between A and B provides service back to A, you can see that the loan will be reduced by those services. So instead of me having to pay my related party, I can just take it off that loan. And the third and final is a constructive payment. Now, constructive payment is whereby the entity instructs the person who they owe money to pay someone else on their behalf. So an example of that would be party A owes party B, and party C owes party A. So instead of party A receiving the cash, party A says, party C, don't pay me. I've got a debt to party B over here. Can you just pay party B directly? And that will be a constructive payment. So again, related party transactions, just need to go in a little bit more detail there just to make sure that we are covering it off. So timeframes and how do we do it? Assuming that your year end is 30 June of each financial year, you have 10 months after year end, so that would fall on 30 April. So if your year ends 30 June, you've got until 30 April of the subsequent financial year to then lodge that application with the Department of Innovation and Science. You've then got until your tax return due date to then lodge your income tax return. Now, if your income tax return is due before 30 April, then obviously you would have to lodge your R&D application prior to get the registration number to then include in your income tax return. But the latest you can do is 10 months. Now, if you have a substituted accounting period, so your year end doesn't end on 30 June, for example, it might end on 31 December, then you have 10 months after your year end. If you don't hit that 10-month after year end, can you get an extension? The answer is yes, but extremely unlikely. You need to prove that it was completely outside of your control, that you should be entitled to an extension. You need to apply for it. I personally haven't seen any extensions granted. It's an annual application. So each year that you want to claim the R&D tax incentive through your income tax return, you need to lodge an R&D application. Now, the exclusion to that is if you have received an advance finding. So similar to your income tax return, you lodge that each year. The R&D tax incentive is no different. You lodge an R&D application each year. Now, as I said before, you do need to lodge the application for the R&D tax incentive with the Department of Innovation and Science prior to your tax return. And the reason for that is because you need to register, get the registration number. That registration number then forms part of the income tax return of which you lodge, which then falls out the incentive itself. Now, a trick for young players is it's a new form each year. The Department of Innovation and Science does update its form every now and again. So just make sure you don't just copy last year's or control copy and paste and just fill out the details again. Make sure you do go onto the website if you're doing it yourself to jump on the website and download a new application form each year. There are a few tricks in there. So if you want to avoid those tricks and you need some help fast tracking your innovation, I do a number of them and I'm quite skilled in the R&D tax incentive field. I have a number of people which help me with the R&D tax incentive. I've also built and utilised and changed and adapted a number of different templates, which aids in not only the annual R&D application process, but it also helps with the ongoing substantiative requirements of the R&D tax incentive. So part of the R&D is you need to keep contemporaneous records. Now, what that means is you need to be keeping records as and when the activities are being undertaken. So part of my package, I guess, is you get a number of templates which aids in that substantiation collection process, and it makes sure that you do collect those data points and that information as you go and as the activity. So if you're interested in getting some assistance with either documentation of the R&D activities, the application itself, how to collect data, how to attribute the expenses back to each activity, again, more than happy to help. So I'll just take a moment now, again, if anybody has any questions regarding what we've covered today, by all means send them through, and I'll just give you guys a couple of minutes now. Currently I don't have any, which is good. If you do have any questions after this, by all means, you're more than welcome to then send them through. Contact details is sroberts@vincents.com.au, or alternatively 32284068 is my direct line. Again, you can find me on the Vincents website with all my contact details. So I've just got one question here. Do you need to spend $20,000 each year to claim? Thank you, Lisa, for your question. The answer is yes. So the $20,000 limit is an annual basis. So each financial year that you want to claim the R&D tax incentive, you do need to spend $20,000. As I said previously, Lisa, the exception to that is if you incur expenditure to either a CRC, a cooperative research centre, or an RSP, research service provider. So I hope that answers your question, Lisa. If there's any other questions, by all means, feel free to shoot them through. And again, find me on the Vincents website. If you don't get a chance today, I'll be more than happy to field those questions for you. Doesn't look like there's any more coming through. So again, thanks for your time today, guys. Really appreciate it. Hopefully you guys have got a little insight into the R&D tax incentive. It can be a bit of a wiggly world. There's a number of documentation. There's a lot of information around on it, and it does change each day. So I would encourage you, if you are doing them yourself, to make sure that you do keep up to date with the legislation and the different pieces of information that come through on a frequent basis. Again, more than happy to help where I can. Thanks for your time, guys. Cheers.